But let's get straight to today's action, shall we, with our first guest, Citi Head of U.S. Equity Strategy, Scott Cronert. Scott, it's great to have you on. We did finish the day higher for all of the major averages. It looks like we did get another record close for the S&P 500. How does this set us up not only for the rest of the week, where we know we're going to have some market-moving catalysts here, particularly with the Fed tomorrow, but looking at your forecast for the year 5100, we're above that now.
Morgan, you're spot on. 5,100 3 months ago seemed pretty optimistic. Now we're looking through the rearview mirror at it. We've been in print with a bull market or a bull case scenario of 5,700. The question's coming up: how do we get there? We think we need to see a clear line to even stronger earnings for this year than we're projecting, which is 245 for the S&P. We don't think we're quite there yet, so we're mostly short-term of the view that we have to digest this move, but completely recognizing that there's a FOMO thing going on here that, given this move, I think we're attracting a lot of money off the sidelines into U.S. equities.
Interesting.
Hey there, traders. Thanks for tuning in to Sora Trades. You're looking at a daily chart of the S&P 500 SPY technical analysis for March 20th, 2024. The SPY started off in the red with a gap down at the open after trading as low as 510.31 pre-market. Before the market opens, I like to place a range bar at the overnight's lows and highs. A breach of either level in most cases confirms the trend for the day. Pre-market, after the SPY tested the 510 level around 8:30 a.m., it found buyers that were able to push it up more than $2 before the bell rang at 9:30, or 20 SPX handles, telling us that buyers were coming in at these levels to buy the dip. I like to set my charts on a 3-minute time frame intraday and watch the price action before jumping in. What I watch for is, for one, I want to see the 21 EMA trending up. I also want to see price hold above that level. If price doesn't hold the 21 EMA, but the price is trading above the 50-day moving average, I want to see the 50-day moving average hold price. The next thing I look for is hammer candles to form just above my 50, and we saw that in the first 15 minutes of the open. So 15 minutes into the open, and we have the 21 EMA and the 50-day moving average all pointing up, and that's our go signal to go long. But the price needs to be above the 21 EMA, and the 21 EMA has to be above the 50. If you don't follow the rules, you will likely lose money, get stopped out, and become frustrated. So, wait for it. Another thing is never buy the first bounce. I always wait for price to come back to the cash session's low of day or near it. What we want to see is price bouncing before it gets to the session's low of day. We want to see a higher low, and then we want to see a higher high to pull the trigger. So at 10:30, we get that higher high, we get the higher low, and we see price break above the 50, the 20, and the 200-day moving average. So we go in with a half position. Why half? Because the 200-day moving average is still pointing down. Only slightly, but still sloping down. So now we have 2 out of 3 of the moving averages headed in our favor, and we are in a half position. We wait for SPY to come back to the 21 EMA and test it, and break above our candle that tests the 21 EMA. Boom, we get that at 11:27, we add a half position, and the 200 MA is starting to flatten out. The 21 EMA is starting to ascend at a steeper angle, along with the 50-day moving average. There is one more thing missing from this set. Well, actually 2 more things. Can you tell me what they are? Nod your head if you're still with me. We need the 200-day moving average to slope upwards for 1, and for 2, we want to break above the range bar of the pre-market high that we placed on our chart before the bell rang. Boom! We get that at 12:18, and we load the full position. Once the price candles get far away from the 21 and the moving averages widen apart from each other, we close the trade and wait for the next setup. Today, the SPY made a higher high than last week's candle, negating the red shooting star that printed last week. Last week's candlestick made an inside candle, and for this week, we are looking for an outsized move, and after tomorrow's FOMC meeting, we might just see that. The rising 5-week moving average in this time frame continues to support price, despite the highest relative strength reading in years, with the weekly RSI rising above the 78 level today, with the highest close in history of 515.76. For Wednesday, before the market opens, we like to place range bars at the overnight's lows and overnight highs. A breach of either level in most cases confirms the trend for the day. If we see a gap up in the morning, we want to let price come down and close the gap, make some hammer candles near the 515.71 level, and hold the overnight lows. When the 50 and 21-day moving averages are trending up, we go long, and when they're trending down, we go short. We wait for price to make a double bottom and buy the second retest if the moving averages are pointing up. Before we go long, we want to see price respecting those moving averages and making a higher high. The first target is the previous day's high or near there. In the event the SPY gaps down in the morning, we want to wait for our double bottom pattern on the 3-minute chart. We want the 21 and 50-day moving averages to point up, and we want to see hammer candles forming at support to tell us that buyers are in control. If we see price candles unable to hold above the 21 and 50-day moving averages on a 3-minute chart, and the moving averages are trending down, and price is below both of the moving averages, we want to only take short trades. We do not want to short, however, when price is far away from the 21 EMA. We want price to be near the 21 EMA and getting rejected. That's our short entry. Where is the stop? It is above your entry candle. That's it. Price gets above your entry candle, you are out. However, if price holds below the 21 EMA, we want to watch for a test of the 512 level for tomorrow and maybe even the 5-week moving average. And that brings us to a close for this video. However, before we go, we'd just like to mention that if you would like to receive our trades in real time as we make them, be sure to join our Patreon, which you can find at patreon.com/soartrades. Thank you all so much for watching, and if this video resonates with you, be sure to take a moment to leave a comment below and share this video with your friends and colleagues. And don't forget to like the video. Until we meet again.